Keep the drive, join the ride, music loud, tech it tunes, we so proud. Show those goals in the crowd, come on, shout it out now. Join the ride, music loud, tech it tunes, we so proud. Show those goals in the crowd, come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes so alive. Sugar skulls, keep the drive. Join the ride, music loud. Tech it tunes, we so proud. Show those goals in the crowd. Come on, shout it out now. Join the ride, music loud. Tech it tunes, we so proud. Show those goals in the crowd. Come on, shout it out now.
Here we go. Here we go. All right, put that down.
CBS. Well, coming up in the next hour, Katie Kaminsky is going to join us from Alpha Simplex. We're going to talk about dollar weakness, very much a story this morning, with equities at an all-time high. Then Cummins CEO Jen Rumsey is going to explain how she is navigating tariffs and volatile demand. And we're going to discuss the state of the shipping industry with Pitney Bowes CEO Kurt Wolff. All that to come here on a very jam-packed hour of Open Interest on Bloomberg.
Let's see if you can hear me now.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there will be rebalancing, and it's hard to call it because the technology trend in the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion trillion industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From ABC News, I'm Michelle Franzen. After Secretary of State Marco Rubio announced the end of the U.S. combat mission against Iran,
The operation is over. Epic Fury, as the president notified Congress, we're done with that stage of it.
President Trump now says Operation Epic Fury ends if Iran agrees to deal or bombing could resume. The president also says he's pausing Project Freedom, where the U.S. military began escorting tankers through the Strait of Hormuz days ago to help progress on peace talks. Tankers once again in limbo along with oil and gas prices. Here's ABC's Rebecca Jarvis.
The actual price of gasoline is not expected to decline anytime soon, and that is because of what's happened to our oil and gasoline inventories here in the U.S. Record amounts of these products have left the country in the last week as foreign buyers have been forced to find alternative sources. Our gasoline inventories now are at multi-year lows, which means prices will face even more upward pressure heading into the summer.
Indiana primary races yielding projected wins for at least 5 Republicans in state Senate races that were endorsed by President Trump. State Senate candidate Brian Schmolzer, one of them, taking a victory lap.
I've only cried 4 times in my life, and this is number 4.
In Ohio's gubernatorial primary,
I am so honored to be the Democratic candidate for governor of the great state of Ohio.
Dr. Amy Acton faces Republican Vivek Ramaswamy in the midterms. There are now 8 confirmed and suspected cases of hantavirus on board that Dutch cruise ship off the coast of West Africa. 3 passengers have died. Today, 3 sick passengers were airlifted from the ship. Commerce Secretary Howard Lutnick returns to Capitol Hill, facing more questions in a closed-door session on his ties to the late convicted sex offender Jeffrey Epstein. Tickets to the new museum at the Obama Presidential Center are going on sale this hour. The center opens to the public on Chicago's South Side, June 19th. You're listening to ABC News. The FBI and banking industry renewing warnings about the newest techniques that scammers are using, including high-level role-playing with criminal intent.
Using information gleaned from the dark web or from legitimate data brokers, scammers posing as
Gleam.
firsthand.
When somebody is calling and pretending to be the FBI, the victim thinks that they're in trouble, so they're already frazzled.
Robert Richardson is with the FBI's Chicago field office,
The criminal then starts rushing them more.
rushing them to transfer money out of an account the victim
Nice.
into an account that turns out to belong to the scammer. The FBI took nearly 200,000 complaints about spoof phishing last year. Jim Ryan, ABC News.
The 4-day school week is growing in popularity around the country, and kids and teachers are stretching those in-class days to take one day off. Here's ABC's Sophie Flynn.
More schools nationwide are embracing the idea, especially in rural areas. More than 2,000 schools in 26 states are now on a 4-day schedule. Studies show mixed academic results. Critics argue struggling students can fall behind, and families face childcare challenges. But south of Tucson, Patagonia Public Schools are reporting positive results after switching to a 4-day week 2 years ago. Math scores are up 7%.
Palo Verde High School in Arizona Arizona plans to switch to a 4-day school week in the fall. The principal says Fridays, though, the school will remain open for students to use, including the gym and library. Michelle Franz on ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube, streaming live on Bloomberg.com as well. We got some green on the screen out there. We got maybe some progress on the Iran front. So that's what this market means. Oil's lower, stocks are higher. Coming up, we're going to check in with Tyler Kendall, Bloomberg Washington correspondent. Get the latest on what may or may not be happening as it relates to Iran. George Ferguson, Bloomberg Intelligence, Senior Aerospace, Defense, and Airlines analyst. Talk to us about SpaceX. Proposes a $55 billion to begin aircraft projects in Texas. I mean, the money being thrown around on these companies.
I know, it's
space
bananas.
companies.
Tens of billions of dollars one day or another. It's, kind of like child's play.
Mandeep Singh, he runs the tech research for Bloomberg Intelligence. He's going to talk to us about anything technology related. Again, we could talk to him for an hour. I think Uber reported some numbers, so we'll break it down there. Last night, taking a car home from the city, I arbitraged between Lyft and Uber for a 30% discount.
Whoa.
Yes, and it was going down to the Jersey Shore, so it was a big number to begin with.
Which did you end up with?
Lyft.
That's usually the case in New York, I
Yeah,
find.
I mean, it was serious. And like Matt Miller does not do that. He leaves money on the table. I'm trying to school that young man, but that's
Well,
how
he
you have
just
to do
goes
it.
with his
He just
one
goes,
app.
he goes, yeah, whatever. He just goes Uber, I guess. So
Well, not everyone is Matt Miller.
that's how we go. Let's kick this whole thing off with John Tucker.
Okay.
John, what do you have?
All right, guys. This flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR. Trade, election, climate, economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. So you have 9 of the 11 major industry groups in the S&P 500 higher right now. Materials, the best performing industry group. And the worst performer, energy, as crude oil prices, they continue to fall. But right now they've paired some of the earlier losses. Brent, the international benchmark, about 6% lower, 103.52. There was some optimism earlier, faded somewhat, about possible conclusion at some point in the war with Iraq. Dow Jones Industrial Average up 480 points. That's up 1%. The S&P 500, 54 points higher. That is up 0.8%. Remember, we closed at a record yesterday for the S&P 500, so anything in the green is another record. The NASDAQ, tech-heavy NASDAQ Composite Index, up 0.9%, 235 points higher. Advanced performing individual stock. We'll break down the earnings in a minute here, but that belongs to Advanced Micro Devices, and those shares were close to 20% higher. Some of the other performers include Corning, as NVIDIA buys $500 million worth of rights for shares in the fiber optic cable maker. Eli Lilly spending another $4.5 billion on its manufacturing plants in Indiana as the company shores up its domestic supply chain. This investment is going to go toward technology enhancements at Lilly's first dedicated genetic medicine facility, which actually opened just today. And then shares of local favorite IFF, International Fragrances and Flavors. Flavors and fragrances. You can smell them as you go down Route 36 in New Jersey. No, it's a good smell. It's like they make the perfume.
As opposed to other smells in New
stuffy.
Jersey.
Yes, exactly.
And it's kind of cool, the facility.
Yep.
Like a lot of land. It's on both sides of Route 36. They put in this huge solar array
Did they?
to generate power. So anyway, if you're going by wave, those shares right now among the most active, also one of the best performers in the S&P 500, 14% higher in today's trading. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett, Paul.
Dogs must love sticking their heads out in the car right
Yes.
around there.
Not so much on the turnpike by Elizabeth, New Jersey. The petrochemical
Yeah, Route
plants.
36, okay.
Yeah, a little
Don't
bit
stick
better.
your head out by that refinery.
Exactly
JT, thank you so much. We appreciate that. Scarlet Food, Paul Sweeney, we're live with you here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Boy, big rally in the markets today. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News. Avalon, what are you looking at?
Well, we can start off with Advanced Micro Devices. That's ticker AMD. I mean, obviously, it's one of the top performers in the S&P 500 this morning, up now about 17% to hit a record high. And that's after the company gave an upbeat second quarter forecast as it continues to cash in on that AI spending craze. And it also reported a first quarter beat practically across the board. After getting that print and that update, AMD got several price target boosts across the street and an upgrade to buy at Goldman Sachs, who said that AMD should be an outsized beneficiary of enterprise agentic AI adoption.
Oh, it's CEO. Have you heard Lisa Su? Wow, she impressed. I've heard her speak a few times. I'm just like,
I believe she's also a distant relative of Jensen Huang, too.
oh, is that right?
Yeah, well,
Okay.
they're both from Taiwan, so
Okay, so
Taiwan's
that-
a small island.
So that happens. Okay. What else you got for us?
Walt Disney, that's
Thank you.
ticker
Mickey Mouse.
DIS. Yes, 8.2 up 8.2% right now, most since last May. That's after Disney reported second quarter results that beat expectations as guests continue to spend on those resorts and cruises, and also amid improving profitability at Disney Plus. It also had strong demand in the box office this past quarter for movies like Zootopia 2, Hoppers, and the new Avatar movie. The CFO saying in the call that it's shaking off concerns that higher gas prices would impact the park's demand, saying that Disney continues to see no real change in consumer behavior due to those gas prices. Though still important to mention that international visitor traffic has been slightly softer.
And what I know about the Disney things, most people fly to Disney properties, as opposed to say Six Flags, where most people drive.
Yes,
to
that's
it.
right.
So it gets a little bit of it's a different dynamic there for the theme parks. But they had said that some of their international travelers are down as well. So kind of nice. CV is in Victor, not B is in Boyd. CVS Health.
Yeah, CVS is now up about 7.8% to hit its highest level since 2023. That's after the healthcare insurer boosted its full-year adjusted EPS guidance as Aetna profits continue to increase. It also reported adjusted profit and comparable sales for the first quarter that topped estimates. RBC writing that the report came well ahead of expectations amid notable improvement in its healthcare benefit segment. Also worth noting that this is just another example of better than expected results in the healthcare insurance sector, which is definitely going to help some of that broad investor sentiment since people have been fairly down on the sector lately.
They certainly have, with the whole repricing of the Medicaid reimbursements and all of that. Aviel, thank you so much. We are speaking, of course, with our equities reporter here for the Market Movers, Avalon Purnell. For more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for these 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. It is risk on today across the markets on some kind of hope
Can I
of
just
some kind of
interrupt
U.S.
here?
Iran deal. Yes, please.
This is breaking news. Ted Turner, the CNN founder, has passed away. So just want to bring that.
Thank you for telling us
But
that.
I got to know him back in the day when I first started in the media industry, and he was the absolute definition of a media mogul. You know, kind of bigger than life, brash, the mouth from the south, and he sold his Turner company, Turner Networks, to Warner Brothers, and became part of that. And it was kind of funny to see him try to coexist within this Warner Brothers corporate culture based in New York City. Of course, his Turner Networks were based down in Atlanta, and it was all about him.
And that legacy lives on, right? Because CNN based in Atlanta as a result
And
of
a huge
Ted Turner.
landowner out west.
Yes.
He donated so much of that as
Yeah,
well.
he and John Malone on the cable side, you know, they were like, you know, they were kind of came up through the business together. Ted Turner with the networks, and then John Malone with the cable systems that carried the Ted Turner networks. And they both, and John Malone still is one of the largest landowners.
And also made a huge contribution, if I remember correctly. I don't remember the figure, but to the United Nations.
Yes.
Turner did.
Yeah. So it's a good story there, kind of thing.
Ted Turner passing away at the age of 87, one-time Mr. Jane Fonda as well.
Yes, exactly. Let's get the latest on what's happening in Iran. We certainly have some news flow today. Tyler Kendall, Bloomberg Washington correspondent, just down in Washington, D.C. Tyler, can you give us the latest on kind of what we're hearing from both the U.S. and Iran here?
Well, Paul, it has been a morning of fast-moving headlines. As of now, a person familiar with the matter tells Bloomberg News that Iran is currently reviewing an updated U.S. proposal and is expected to respond via Pakistani mediators within the next 48 hours. And we're seeing President Trump try to ramp up the pressure on the country. He posted earlier today on if Iran doesn't come to the table. Our reporting indicates that right now the two sides are discussing a one-page memorandum of understanding that would first seek to have a gradual reopening of the Strait of Hormuz, with the U.S. lifting its naval blockade. Under this plan, how it stands, it would appear that that would then kick off another round of more detailed negotiations surrounding curbs to Iran's nuclear program. Axios was the first to report on this memorandum of understanding and had a little bit more detail about what it could entail, including that we may see progress around Iran removing its stockpile of highly enriched uranium, and that Iran may agree to a moratorium on uranium enrichment. But we should say that we heard from Iranian state media actually within the last hour disputing this, saying that, quote, the nuclear issue is not under discussion at this point. Paul and Scarlett, it's very clear that a lot still needs to be worked out here. In fact, President Trump told the New York Post this morning that it is, quote, too soon to even talk about discussions for another round of in-person talks, since so far these negotiations for now have just been happening over the phone.
So, Tyler, just help me distill how this proposal is different from the proposal that has been made in the past. It sounds like it's just a more moderate version of what the U.S. has demanded before, which is a reopening of the Strait of Hormuz immediately, and Iran putting to rest its nuclear ambitions immediately. Now it's kind of being ratcheted down.
No, that's a really good point, Scarlett. And actually, most importantly, perhaps, is that under this plan, it is our understanding that it would kick off this new phase of negotiations around Iran's nuclear capabilities. That's going to end up being the big sticking point in this. The White House has previously said, after we had reported that Iran put this idea of delaying talks about its nuclear program on the table, that that was a non-starter for the White House, that any deal must include commitments to put curbs on those nuclear capabilities. So we'll see if in this one-page memorandum that happens first, that there isn't any sort of postponing. Yet we heard from the Secretary of State, Marco Rubio, yesterday saying that these talks are very technical, that it's going to take time to have this happen. So maybe this is some sort of compromise that has emerged, that there will be some sort of firmer commitments on what Iran is going to work towards when it comes to its nuclear program, but that we're going to have to see that ultimately phased in, because these talks have been going back and forth. The negotiators aren't even in person quite yet. But it is very clear that this White House wants to get momentum going towards a deal. We saw President Trump pull back on the initiative to help guide ships through the Strait of Hormuz after that contributed to the worst flare-up in fighting since the ceasefire began just earlier this week.
Tyler Kendall, thank you so much for your reporting. We really appreciate your time. Tyler Kendall, she is the Bloomberg Washington correspondent for Bloomberg News, located down in our Washington, D.C. studio. Again, maybe some headway there, some movement forward. Certainly seeing that in the energy markets. WTI crude oil off about 7% here today, about $95 per barrel. Had reached $88 earlier today, so off the lows, but still reflecting maybe some easy tensions on the margin here. Brent crude, that's off 7%, down to $102 per barrel. S&P up 0.8%. The NASDAQ up over 1%. The VIX below 17. How about that?
500 and the Nasdaq, for that matter, on track to hit more records today. Investors hopeful that the U.S. and Iran nearing a peace deal, although some of that earlier optimism seems to have faded just a bit in the early going. The Dow Jones Industrial Average of 575 points. That's a 1.2% pop. S&P 500 65 points higher, up 0.9%. We're at 73.24 on the index, and the Nasdaq Composite Index 1% higher. That is up 270 points. You have Brent crude down 7% right now, 101.93 a barrel. West Texas crude, that's down 7%. It's under $195 $14 a barrel right now. Big winner today, Advanced Micro Devices. Flood of data center spending boosting the sales forecast there. They delivered after the close yesterday. Chipmaker giving a pretty strong prediction for growth, and the shares this morning among the most active, and they were up close to 20%. Then you have Disney seeing little magic this morning. Guests spending more at Disney's theme parks, booking their cruises. They flocked to the theaters recently to see Zootopia 2, Hoppers, and Avatar, Fire and Ash. This, along with improving revenue in the streaming business, helping Disney post stronger earnings results than expectations. And then CVS raising its financial outlook for the year. Health giants Aetna insurance business is making changes over the last few years to boost profitability. And again, just to recap, I'm watching CNN. It's like wall-to-wall coverage of this, obviously.
Yeah,
But
huge
CNN
turnout.
founder, media and philanthropic pioneer Ted Turner has passed away. So just to recap that for you, we check the markets and other news for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett Paul.
It feels very meta that CNN is covering
Yes, good point.
the passing of Ted Turner like this.
Yeah, but I mean, just to put it in context, he was one of the absolute pioneers of the cable television industry as we know it today. You know, John Malone would lay the cable, and Ralph Roberts from Comcast would literally string the cable along. But it was the programming side of it. Ted Turner was one of the originals.
And he weighed in on everything.
Yes.
Right? He had lots of opinions.
Larger than life, true media mogul, huge personality.
Atlanta Braves owner, and
Yep.
I do recall back in the day making a bid for CBS. It would be funded with junk bonds.
Yeah, those were the
Do you remember
days,
that
baby.
one?
There we
Feels
go.
like we've come full
Uproar.
circle.
Yeah,
Exactly.
the uproar that caused.
Exactly. All right, let's get back to it here. Elon Musk, SpaceX, is proposing to spend $55 billion to begin construction on a new semiconductor production facility. And guess where? Texas, dubbed Terafabs. Let's check in with George Ferguson, senior aerospace, defense, and airlines analyst for Bloomberg Intelligence. I think we need to also, I think he's going to be the space analyst as well, because aero defense.
Your
and
portfolio is expanding,
aerospace.
George.
Exactly, George. George, talk to us about SpaceX. What do you think they're doing here as they get ready to maybe go public?
Yeah, so we do cover space first. Yes, that's
There you go.
Part of aerospace.
Thank you.
Sorry. And well, I mean, I think he's concerned about his supply chains, right? He sees a heavy need for semiconductors. I mean, you know, part of sort of putting SpaceX and XAI and Starlink together is all about putting data centers in space, which requires a lot of computing power, which requires chips. And, covering him from afar before getting SpaceX, as he's preparing to go through.
Check 1, 2.
One of the things I've sort of heard and seen is just that Elon Musk likes to control his supply chain. And I think he also likes clearly to drive down costs inside his supply chain. He's done it with Tesla from some of the analysis I've seen. And I think this is that same playbook, right? He wants to own his supply chain. He knows semiconductors is a big issue. He knows he's going to need a lot of them. And so he wants to get in it and build it himself. And I think would be a great thing. I think I could see a lot of other industries in the U.S. that would like a more robust U.S. semiconductor supply chain, including defense. So he may also find other opportunities for these chips he's making. But supply chain control, I think, is concerned about getting them out.
Okay, Elon Musk, he is known for thinking big, really big. Is it realistic for him to be able to create a semiconductor plant that can really move the needle, take on stalwarts like TSMC?
Look, there's a lot of people that have bet against him think sort of the roadside is littered with them, right? And so I'd be very careful. I'm typically a doubter. It comes from, I think, my early days in credit. I'm still working through it.
Check 1 2. Check 1 2.
Right. Look, we watch them even in SpaceX, right? We have a company now that's launching 150, 60 rockets a year, reusing bottom portions of those rockets and driving down the cost to access space. And I think if we talked about this 2 decades ago, we'd say never going to happen, right? And he is by far the leader in space launch now. Again, every other day he's launching something.
Yep.
Even New Glenn couldn't get it all right in the last launch, and they're trying to catch up with their billions of dollars. So I would say it's big. He always goes big. I have a hard time betting against him anymore. He's done so many things big. I think he's got a real good opportunity.
George, what do we know about the timing of this potential IPO? It's been reported for a while, but haven't seen much.
Yeah, neither have we. We keep hearing June-ish, summer-ish.
Check 1 2. Check 1 2.
Recently, as you know, Paul, to sort of watch markets and see how they're performing. But I think I think that, to me, if the markets are performing, the timing looks right to put a lot more cash again inside this SpaceX venture and go for this data centers in space and more investment in XAI. Again, with this New Glenn failure the other day, the FAA is looking at what happened in the New Glenn shot. His distance on his competitors looks even better. I would think that would help going into an IPO.
I wouldn't get on that roof either.
George Ferguson, our senior aerospace defense and airlines analyst, joining us from Princeton. Let's come back to earth and talk a little bit about companies that have things that drive on the roads, on the ground here, and that is Uber. Uber coming out with results. Investors really like them because the stock is up almost 9% on the day. Mandeep Singh is our global tech research head here at Bloomberg Intelligence. He covers tech companies, including Uber. Mandeep, what does Uber results show you about how its core business, which is rideshare, versus its ambitions for driverless rides looking? What does that tell you about its prospects?
Yeah, look, this is a company that still has the scale when it comes to ride sharing, food delivery, 3.5 billion rides. And when you compare to the scale of rides for Waymo, for example, even though it's growing really fast. And in the case of Uber as well, they talked about AV rides growing tenfold. But these are just 15 million run rate compared to 3.5 billion rides that they did in the quarter. So at the same time, I just feel with Uber, there are some headwinds in the sense like they have to scale AV rides where their take rates go down. They have to start buying fleet for AVs now through their investments in Nuro, Lucid. So this was an asset-light marketplace business. It feels like where it's going with Uber is also they will have to ramp up their investments. And so from that perspective, I definitely feel that they will run into some issues when it comes to their margins and take rates going forward with the pivot to AVs, which clearly is the fast-growing part, albeit it's very small.
How is this ride-sharing market, how do investors think it's going to evolve here? I took my first Waymo ride a couple months ago in Santa Clara, California. Is that a substitute for Uber/Lyft ride? How do you think about the future of this?
If you have to go from point A to point B, and look, with Uber, almost 35% of their rides come from their metropolitan cities. So Waymo is operating in the same cities, and look, in some cases they are partnering with Uber, but in a lot of the other cities they're not partnering with Uber. So suddenly your market share.
There we go. There's our automated Uber drivers.
People are using, and these AVs have a higher utilization. So I think Uber definitely has the advantage of scale and the fact that they operate at a much bigger level than any any of the other smaller providers, especially Lyft. But I do think over the medium term, the AVs will start hurting their margins. And
I don't know. I mean, I get in the back of an Uber with somebody I don't know, never met before. What's this difference between a human and some technology?
The human will still let you out of the car if you want to get out. What if the Waymo is locked and you can't get out? Or what if there's a blackout like there was in San Francisco and the car just stops in the middle of the intersection, which is what happened in San Francisco?
But I mean, there
You're a
are remote
fear-monger.
No, I'm just reporting what happened.
But there are remote teleoperators. To your point, it's even though there is no driver in the car, there is somebody watching if remotely. So if there is a problem in the car, it can be managed.
Just like when I have a DoorDash problem and I try to text someone, you know, there's a person there who ostensibly should answer but never does.
Yeah.
Mandeep, let me ask you about Lyft because you mentioned this, the fact that this is the smaller rival. They're reporting earnings tomorrow. Uber has this scale. You said 3.5 million rides?
Yeah.
We know Lyft is starting to expand internationally. I mean, can it ever be anything but a distant two?
No, I think that's where it will remain a distant two, no matter what they do in terms of geographic expansion or in other new categories like food delivery and grocery delivery, because it all adds up, and that seems to be the playbook. So Uber had the right idea in terms of amassing scale through, international expansion and different categories. So Lyft is probably 3-4 years late in terms of emulating that. But look, I think the big technology change is with AI and with autonomous rides. And if Waymo is successful, the pace at which they're adding supply, and it sounds like people prefer to have that sort of ride and they feel safe, then it will have a bearing on the business model of these companies. And you can already see that with Uber. They are investing, $1.5 billion in Lucid to get AV fleet. So suddenly, you're not an asset-light model anymore.
Right.
Interesting. I arbitraged last night, saved a bundle, Lyft versus Uber, and so I feel pretty good about that.
Did the ride experience feel different
It's
in
the
any way?
same driver in the same car. He's got a Lyft sticker. He's got an Uber sticker. Why do you not arbitrage? I don't get that. But Matt Miller's like, nah.
Some
just go
people are Uber One members, the loyalty program, so they want to make sure they accumulate points. Just like some people only fly United.
I'm Paul Sweeney One member. The cheapest price for me. So anyway, to get me point, that was a big trip down to the shore. Mandeep, thanks so much for joining us. Mandeep Singh, Global Tech Research Head for Bloomberg Intelligence. You think about the divergence when Uber and Lyft became public, and the divergence, how big Uber's become,
Yeah, I mean,
and Lyft is
they
just a
invented
fraction.
the food delivery business in a way that Lyft can't catch up to.
Yeah, it's
at
just
least right
amazing
now.
how one was so successful and the other not so much. And again, they started from roughly the same spot, coming public at roughly the same time. More coming up. This is Bloomberg.
today at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Looks like we're on track for more records. Did have a record-setting day yesterday for the S&P 500 and the NASDAQ, and they're headed that direction again. S&P 500 up 77 points. 1% pop there, 73.36 on the index. The NASDAQ Composite Index 331 points higher. That is up 1.3%. The Dow also higher, but still shy of any record of 562 points. That's a rise of 1.1%. 8 of the 11 major industry groups in the S&P 500, they're pushing higher right now. Energy is actually the worst performer as you have crude oil prices falling. Brent crude down 7%, 101.77 a barrel. And American crude, West Texas, 7% lower at 95.03 a barrel. One of the most active Advanced Micro Devices, the leading challenger to NVIDIA in AI computing. Those shares are surging. They had results after the close of regular trading today. Right now, 15% higher. A flood of data center spending boosting its sales forecast. NVIDIA has purchased $500 million worth of rights for shares in Corning, the fiber optic maker. It's part of a broader partnership between the two companies, and it's aimed at expanding, yes, artificial intelligence infrastructure. And Corning of upstate New York, those shares right now are 12% higher. No thanks to Paul Sweeney. Uber delivering a financial forecast that topped Wall Street expectations, and shares of Uber, they are higher in the early going. A snack maker getting a brain boost, the company that makes Baby Bell cheese and other grab-and-go bites, buying Ingenuity Foods, which is behind the Brainiac and Little Brainiac brands of applesauce squeezers, berry fruit snacks, and pouches of fruit and veggie blend.
Baby Bell, my kids love that when they were little.
Yeah, this is apparently brain food. So, oh no, Brainiac includes omega-3 and other ingredients intended to foster brain health. Maybe that's my problem. I didn't have this stuff as a kid.
They didn't call it protein in the same way they call it now, right?
No.
That's another form of
Yeah.
protein.
I don't know.
And I just recently learned, like, while my mother was pregnant with me, she was drinking cream de mint. Hey,
That
anyway,
explains a lot.
we checked.
I have memories sitting on my mother's lap watching like Jeopardy when she first got a cigarette hanging out. How good is that?
Good
We
for you.
survived.
Yeah, we did all right. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett Paul.
All right.
Scarlett doesn't want to confess anything. Okay.
I mean, come on. I
It's
was
like we're on the
exposed to lots
couch
of
here.
secondhand smoke, so I've watched a lot of TV with bunny ears as well. All right, let's talk a little bit about one of the companies that has been around for at least that long. Walt Disney Company coming out with results, and investors seem to like what they're seeing. The stock is up more than 8% after Walt Disney posted stronger results than Wall Street had expected. All three of its main businesses beating analyst estimates. We're going to talk about that as well as the digital advertising space with the CEO of Mountain. He is Mark Douglas. He's the president and CEO there at the company, and he joins us now. And Mark, I just want to start on what's happening at Disney because it is a Dow company, it is an S&P 500 company. From where you sit as a digital advertising company, what do you see about Disney that other media companies can't quite replicate?
Well, I think in Disney, one thing is the set of properties they have. I mean, they literally have Disney, they have ESPN, they just have brands that people understand what they represent and why they would go there to be entertained. And then it goes beyond media. That goes to the Disney parks, Disney cruises, and things like that. I also think that they're doing a very good job in terms of execution right now. Things might have gotten a little soft there, but that team is determined to win. When I talk to executives there on the media side, they are very competitive with Netflix, and like they are very focused on winning. And I think you're seeing the results of that in terms of some of the results you're seeing for the quarter and hopefully for the rest of the year.
Mark, from your perspective at Mountain, you see where kind of the ad dollars are being allocated here. Are we getting to a point where, maybe outside of live sports, it's going to be, almost impossible for broadcast networks, cable networks to attract advertising as more and more and more goes to the digital platforms?
Well, I think we're already past that point in terms of cable networks. I mean, the only conversation people want to have, and that advertisers as well as the sales teams at companies like Disney are about streaming. So it's not, obviously there's still a big portion of the US that has cable subscriptions and watches cable, but all the real conversation is on streaming. And by the way, the reason for that is people want to talk about audiences. The idea of just broadcasting out a message and hoping it's received and the old adage about wasting half the money, I think marketers have figured out, and we kind of led the way at Mountain, this concept that television can be a performance channel. We're seeing that not only in small, mid-sized businesses, but also on the enterprise side. I think, like literally, the sales teams of these big media companies are understanding that too, and they're adjusting and responding to it.
Mark, aside from live sports, where do advertisers, what kinds of programs, what kind of content do they want to be linked to? What kind of shows do they want to be advertising on?
Yeah, I mean, this year in terms of live sports, it's insane. Between the Olympics, the World Cup that's coming later this quarter and going into next quarter and stuff like that, there's just been the Super Bowl, there's just been an incredible lineup. But they're all, reality television is incredibly attractive. The home improvement. But I want to make one other point with that. I always say television has the best content in the world. It's the thing you talk about over. I can't remember last time I've been at a dinner and someone didn't say, "What are you watching these days?" And they don't. And it's just a natural conversation. They're generally not talking about movies. They're talking about television. And so it's this incredible medium, and I think advertisers love to associate their brand with that kind of content, but increasingly they're focused on audiences. I want to reach a certain group of people regardless of what they're watching, as long as they're watching it on the biggest screen on their home. So I think live sports and that kind of entertainment, these tentpole events are really important, but what's ultimately important is basically turning TV into a digital channel. It's no longer broadcast. It's now you can pinpoint consumers and get your message across to them. 30 seconds uninterrupted time.
How about YouTube TV that's become obviously the dominant player in digital video? Just about where that business is and how advertisers view it.
Yeah, so I think there's YouTube and there's YouTube TV. YouTube TV is actually pretty small. YouTube is obviously very large. I like to say about YouTube versus streaming television is that YouTube owns the day and television owns the night, and and it's just two very different. It can be the same person doing both. I know I do both. I consume a lot of YouTube, and I watch. I enjoy being entertained. I enjoy being told the stories. So I watch a lot of TV, but I do them at very different moments, and they're both a portion of my life as well as social media. I think the individuals, they understand what they want when they want it, and they're not, this idea that YouTube is competing with, season finale of Landman, it's just not happening. Like people are not, they're not making those choices.
You guys at Mountain just reported earnings. Tell us kind of what you told your shareholders today.
Yeah, so we had a great quarter. We beat, and we guided up for the year, and so we're seeing continued growth in our business. We're excited about it, and we have more quarters to come. So
why do you think that the stock is trading down today?
If I could predict how the stock market's gonna, we wouldn't be on this call. I can't tell you. I can't answer that question.
All right, Mark, thanks so much for joining us. Mark Douglas, he's president and CEO of Mountain. It's a publicly traded company, MNTN. They reported some earnings today. Just getting a good conversation on kind of where the advertising dollars are going out there. It's such a big marketplace, the total ad spend, but it's been a seismic shift over the last 20 years from broadcast and cable television to really digital advertising.
Yeah, and just to stay on that theme, for anyone who is just tuning in, Ted Turner, who of course founded CNN, and that really led us into cable television, 24-hour TV news. He has passed away at the age of 87. Of course, he created CNN, but he also inherited the billboard business from his father and turned that into this media enterprise.
Yep, absolutely. And just one of the great media moguls, true to that term for sure. Ted Turner, one of the giants, the mouth from the south. S&P 500 up exactly up 80 points. This is Bloomberg. Good morning.
Sock got his mug. It's a bowl. Are you watching your stocks now?
Live Nation. You want to go to a concert? You want to buy a ticket to go to a concert? You got to go through the folks at Live Nation. They own that business. Although
They'll take a piece of your dollar.
yes, the government is looking at it as well. So I bought it. All right, bought 2 movie tickets to go see Devil Wears Prada. 2 tickets, $51.
New Jersey. You clearly bought snacks along with it.
No.
No?
Karen Sure snuck in some popcorn. How about that? So anyway, Live Nation reporting some numbers here. We'll get to it right here. Kevin Neer joins us here. He covers a lot of the live action sports and all of that entertainment and media stuff for Bloomberg Intelligence. Kevin, talk to us about Live Nation here. Talk to us about kind of their results, how's the business, and then ultimately, how are they dealing with the regulators here? Because I know the regulators are looking at their Ticketmaster business.
Yeah, absolutely. Thanks, Paul. I mean, we'll talk about the regulatory in a minute, but I would say, just looking at the entirety of the business, I mean, this was a great start to the year.
So Live Nation, which they charge way too much for tickets anyways.
The biggest segment was up 12%. Ticketing was re-accelerating. Nice on-sale activity there, and then we saw a lot of the Venue Nation investments flow through on the sponsorship line. So overall, great 1Q print. They feel very good about the supply and demand dynamics, but we'll have to see again how that litigation shakes out later in the year.
Have they changed the way they do business ever since the government began taking a much closer look at the Ticketmaster business and the ticketing business?
Yeah, they've been public about making some significant changes to Ticketmaster. Most notably, I would say, is on the secondary side. So secondary resale for Ticketmaster has always been a very small portion of their business historically, low teens % of their total transactions.
That was a big jump.
We've seen though is that since the launch of the Bots Act recently, I know the FCC is suing them for supposedly violating that.
May. So, okay, so that's May 26th.
On their platform, so they see that business declining, but largely offset by growth in primary.
So ultimately, what's
No, May 5th. It's May 5th.
Ticketmaster might have to do. I'm sorry, Live Nation might have to do with Ticketmaster.
Yeah, so the states are going to be seeking a divestiture. We know that. We think it's going to be quite difficult. Seems the consensus that it's going to be quite difficult for the judge to actually get that through, especially with the DOJ settlements that's still being looked at. But really, there could be other remedies that could increase competition in ticketing and in live concerts. So one thing that's been proposed that we're very seriously concerned about is if would be forced to sell off any of their venues. So that's really the biggest growth vertical right now for them is investing in venues, investing globally, and that's driving a lot of the profit, a lot of the
Physical venues.
Physical venues, yeah, from theaters to clubs to arenas, all the way up to partnering in some stadiums as well. It's been a great story. It's really helped the valuation, but if that isn't there anymore, that's a really that's a big hit.
You mentioned them making some tweaks around secondary ticket sales, but it's the primary ticket sales that are the issue, right? If I want to buy tickets to a concert and I can't get it because the bots buy it up in the first 5 seconds, I'm out of luck, and then I have to go to the secondary market.
Yeah.
What is Ticketmaster doing to address the primary market problems?
Yeah, so you mentioned AI, and they've said this on the call last night. They still see the chaotic, the stress of the on sale is really the biggest pain point for them right now in the ticketing business. They're working with, they've made a lot of hire, they're staffing up to build out their AI offerings, right? So they're using AI to hopefully better detect fraud. Ticketmaster is one of the most highly attacked websites on the internet, bar none. But it's it's a challenge, right? And we've written about this. Even as they're investing in AI and trying to improve their fraud detection, trying to make it easier to make sure that tickets actually ends up in the hands of fans, professional sellers are using the same tools to try to get around those verification tools. So it's really an arms race right now.
I see you also cover Sphere.
Yes.
Stock is ripped. Been amazing. Now, I was supposed to go there to see the Eagles, but I bought fraudulent tickets, and so I didn't go.
Did you really?
Yes. And, yeah, and they're not cheap, by the way. And, I was going for the best.
You bought
they
this
had.
online?
Yes. Day I was flying out there. Boy, those tickets aren't in my account.
Oh.
So, anyway. I learned a lesson there at the age of 61.
Yeah, you did.
Talk to us about Sphere. It's been a great stock.
Yeah, absolutely. I mean, they've really proven out the business model in the last year, I would say. And the biggest difference has been the launch of this, what they call an original experience, the Wizard of Oz. It's gone from a concert venue where they were having a few shows a month to almost like a quasi movie theater where they're showing this program. They're charging $100+ a ticket multiple times a day. And then you stack a concert on top of that, makes for a very profitable day.
And they're trying to replicate this around the world, right?
Yes.
There's going to be Spheres launched in other cities.
Yes, conversations are accelerating. They're actually furthest along with the pre-planning phase in Abu Dhabi. They were a little bit talking around in terms of, if Middle East and Black will kind of delay that. We think it will. But the conversations are broadening, right? They're now a little bit further along with supposedly a new Sphere coming in DC, a smaller Sphere. We've heard reports that they're looking at Nashville, at Japan. So it seems like there's a lot of appetite.
And this was all the brainchild of James Dolan. I mean, when he first came up with it,
Yes.
there are a lot of doubters out there.
Completely. And the cost to build the initial venue was it skyrocketed. I mean, the original estimate was like 1.5, went up to 1.9. As COVID happened, it ended up at $2.3 billion for this venue. So really, really.
I tell you, it's a great addition to the Vegas Strip skyline, and that's hard to do.
Yeah.
Because
Yeah, it
it's the
separates Vegas from, say, Atlantic City, right?
Yeah,
Because
it's
Vegas
awesome.
is a destination where you can do things, see things, and Atlantic City is where you go play slots.
And the Exosphere is totally unique, right? And as they scale up, as they add new venues, that opens new opportunities for sponsors.
Market cap $5.2 billion Sphere. Stocks up 50% year to date, up 400% over the trailing 12 months. People have gotten this story, I guess. Kevin Neer, thanks so much for joining us. Good stuff. Obviously, well trained. And then whoever trained his trainer probably did a good job too. So
Paul
we'll see
Sweeney,
how
are we
that
looking
works.
at you?
That might be me. But Keith is like the smartest. Keith is like the smartest person in Bloomberg. Period. In the
And we'll
entire
get to talk
building.
to her next hour.
We'll talk to her next hour about what's going on. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good hump day morning. This is Bloomberg Intelligence streaming live on YouTube. Paul Sweeney and Scarlett Fu and Charlie Pellet reporting live.
I'm gonna check out the Schwab.
Midtown Manhattan. We are also
Latest, your thoughts on the report?
Last I saw, stock was up 8%, so it gives you an idea of how the street.
Hoover. You got that Hoover.
Gross bookings beats across the board. They have three primary segments from mobility, delivery, and freight, all of which grew, all of which beat expectations.
Which I'm gonna guess just went up due to the autonomous the ruling on the the ruling on the autonomous cabs probably kicked in.
This was very much a story of guidance. Gross bookings guided above consensus, 56.25 to 57.75. A low point exceeded the midpoint estimate for the street. Adjusted EBITDA guided between 2.7 and 2.8 billion. That also eclipsed the midpoint estimate even on the low end. And adjusted EPS 78 cents to 82 cents, basically in line. I would say that in addition to some of the numbers provided, commentary from the company's leadership, such as the CEO mentioning U.S. mobility to continue accelerating into 2026 for their fiscal year, as we just are getting into that with these first quarter results. Emphasized a barbell pricing strategy. I thought this was fascinating. They're focusing on affordability on the low end, but they want to continue to maintain stable pricing within their core, which will help their margins. They also provided some numbers around their Uber One membership, which reached 50 million members and now drives about half of the gross bookings across mobility and delivery. So all in all, a really strong quarter for Uber once again.
Yeah, a really nice pop to the upside, like you mentioned, more than 8%. Did they make any commentary about their autonomous strategy? Because I know some of the most recent headlines have been around this autonomous move and their move to try to get more into that space. And I was wondering if there was anything about that at all.
You know, nothing that stood out to me in terms of street reaction to it. There's always going to be some things swirling around it, but yeah, Marley, this was more of a financial results quarter. When you look at it, beat and raise, and then of course they have a sustainable strategy now that's going to give them that runway to ultimately trying to figure that out. So we know they're trying to make those partnerships. We'll see ultimately if they can make any of them work.
Yeah, certainly doesn't hurt to have a quarter like this with this reaction when you're trying to make those partnerships. Uber moving more than 8% higher following its earnings. Thanks to Alex Coffey, our co-host of Next Gen Investing, for breaking all of that down for us. Do you want to welcome in our next guest? So joining us, Terry Wiseman, Global FX and Rate Strategist over at Macquarie Group. Terry, great to have you on the show this morning. I'd love to start with your thoughts on what we're seeing in reaction this morning to the potential deal between the U.S. and Iran. I was just covering the dollar and oil down. We're seeing really nice pops across all four of our major indices as well.
Yeah, I think the market is taking an approach that where there's smoke, there probably is fire. If the U.S. and Iran are talking about a deal and some details of that deal are emerging, there's probably a deal in the works. Whether or not it's going to be accepted by both sides in the next few days is hard to say. I don't think the circumstances and the situation is perfect right now for a deal to be struck, but I do think we're on that trajectory. And I say that in all earnestness because I think the U.S. has the upper hand here. From an economics perspective, the economy in the U.S. is not really hurting. It may be hurting in the rest of the world, but it's not hurting here. We also have a situation where the stock market is doing well. I think that this gives the president a lot of latitude, a lot of negotiating power as well, to simply wait until the economic war against Iran fulfills its goal, which is to make them concede to the U.S.'s fundamental demands, especially about their nuclear ambitions. So things are good if you look at it that way. It's certainly better than when we were having a kinetic war for more than a month, where we weren't really sure what the permanent implications of all that destruction were going to be on global output and on global supply chains.
And Terry, I want to make sure that I understand your argument here. Your argument is that the economic advantages that we have translated into political advantages here and some leverage even, perhaps. Take me through how you
you think we've built that in this conflict? And realistically, how long we have to play this out before that could potentially change or the scales could tip?
Well, first, I'd like to say that the critical period is the summer driving season in the U.S. Obviously, if the gasoline prices stay high during that period, I think it would be more damaging politically to the president with regard to his domestic audience than than if gasoline prices were high during the non-driving season. So let's just say for a moment that the Iranians know this, and they're willing to continue to try to test Trump's patience with the domestic situation in the U.S. And may want to not concede anything for the next few months. Well, that takes you maybe into the end of Q2, maybe into the early part of Q3, before we actually see a resolution to this conflict, and maybe something that looks like more like a permanent peace agreement. But in the meantime, I think that the pressure on Iran is going to stay actually quite high. Keep in mind, this naval blockade is hurting the Iranian economy, and you can tell that not by looking at unemployment in Iran or GDP growth. We don't really have good statistics on that. What we do have is what we can observe is the unofficial exchange rate in Iran. And the Iranian rial has been depreciating quite quickly against other major currencies on that street exchange, if you will. That's an indication that things are going pretty poorly. Iran's oil output has cratered as well. Their ability to ship obviously has been curtailed. Their revenue receipts from oil shipments have gone to near zero. All of those things are pointing to an incredible amount of stress on that economy, especially including the ability for them to simply pay public sector workers. On the other hand, what do you have in the U.S.? You have gasoline prices that in real terms are not really as high as they've gotten to in the past at extremes. In nominal terms, $4 per gallon might look high relative to where we were a few months ago, but it's not really that high from a historical perspective. Like I said, the economy is still doing well. In fact, the increase in the U.S. oil output over the last 8 weeks or so, it's not inconceivable that will actually be reflected in a stronger GDP growth in Q2 when you take into account that added production. So, he can wait. The president can wait. And I think the longer he waits, the more pressure there is on Iran, and the more willing they are to concede to that one main concession on the nuclear program.
And you pointed out the military action, earlier that we dealt with, and now the president coming forward and saying if they can't find a peace deal, there will be further military action. But there is another card that hasn't been played yet. It's been threatened and mentioned, but not as regularly as the military component. It's in an oil export ban. So I guess my question to you is, how realistic is that threat that would ever actually be enacted?
Well, I don't think it'll be enacted when average gasoline prices are between $4 and $4.50. I don't think the situation with gasoline is that critical at those prices. But if gasoline prices were to get up into the 5 or 6 handle, let's say, dollars per gallon between now and the height of the driving season in the summer, then I think there would be an important and compelling case to make for an oil export ban from the U.S. The reason the president may not have announced this yet is A, he doesn't need to. Things aren't that critical in the U.S. And secondly, of course, if he were to telegraph that this is something that he would consider or do, what you would see automatically is a lot of U.S. oil producers curtail production. And by way of that, the president would actually lose some leverage with regard to the Iranians. So I think what you do is you wait until you have a critical situation, if in fact you have one, and then you put on that oil export ban. And by the way, the Iranians probably know that we could do this, and that further diminishes their negotiating power in the talks that are ongoing, obviously. So I think that's how it could conceivably play out. But it hasn't reached a point where it's critical to do this. If it were, a lot of the arguments I made just a little while ago would not hold water.
Yeah, depending on what part of the country you're in, it feels a little bit more critical than others. The entire West Coast is over that $5 mark. We're within 2 cents here in Illinois.
Yeah.
Chicago is over it.
Well, the West Coast does not vote for the president.
Yes, that is also.
So I don't think he really cares that much about the West Coast. But
Also
your point is
true.
taken.
Yes, but as we look at, is this as a potential, would that potentially be a game changer, not just for oil, but how would that affect currencies and global capital flows if we ever got to that point?
Well, I can tell you that it will probably help the U.S. economy and certainly the consumer in the U.S., but that's the whole point, right? You want to make sure that even though the U.S. economy as a whole is not damaged by higher oil prices, after all, we are a net oil exporter.
whole, but it does have distributional effect. It hurts households. It hurts drivers, obviously. It hurts families. So when you say how will it affect the economy when that happens, well, conceivably it'll help the people who are most hurt by high gasoline prices and hurt the people who are in that gasoline supply chain. Having said that, it's going to be the rest of the world that suffers if and when the U.S. puts on an oil export ban. And the reason is very straightforward. All of that increase in oil production that I just mentioned that's taken place in the U.S. over the last 8 or 9 weeks, all that oil has gone to Asia. In other words, they've actually been helped by the fact that the U.S. has produced more and exported more. Now, consider the prospect of a oil export ban in the U.S. All of that oil would be denied to those countries if that were to happen. So even though the net effect might be, again, zero for the U.S., it might be just a redistributional effect, it would hurt the other economies that are oil importers for sure. Could that perturb global capital markets? Sure, it can. It's not inconceivable that capital will flow back into the U.S. because the U.S. at that point will be still a stronger economy.
All right, we've done a lot of hypotheticals here, but at a minimum, we're into Q2 before this ends, right? Potentially Q3 here, depending on where we go, and we have the leverage to get there. Bottom line, what does that look like from a rates perspective here with this setup that we currently have? How does that dynamic feed into inflation expectations, and do you have any concerns about stagflation?
Well, I certainly have concerns about stagflation, but I have more concerns about stagflation in the rest of the world than in the U.S. again. Remember, the U.S. is a diversified economy. We have manufacturing, we do have minerals, we have services. If there is a pinch point in any of the supply chains that are critical to the global economy, the U.S. is likely to experience it a little bit less because of our diversification of our economy. And of course, we're a net oil exporter as well, which is something that we need to consider when we talk about all of these supply shocks. So again, I'm not too concerned about the U.S. here in respect of these problems.
Terry, great to talk to you. Thanks for being with us. Great thoughts as always. Terry Wong, global FX and rate strategist over at Macquarie Group. We've got plenty more for you today on Trading 360, so don't go anywhere. Next, we've got the big three coming your way. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat taking us through the technicals as always. Don Kaufman will be joining us with his trades for Netflix, Lululemon, and Intel. That's next on Trading 360 on Schwab Network.
Anybody have a suggestion for a gift sub?
Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, opening bell live at the NYSE right when it counts.
She's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up for college fund.
I've been learning about trading strategies.
Schwab helped me generate retirement income.
All this Schwab as everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat will take us through the charts. Here to take us through his trades today, Don Kaufman, the co-founder of Theo Trade. Great to have you both with us. Don, every time you come on, I feel as though there's some attempt at a resolution, and I ask you about it. Today, we have another report of a potential resolution, a nice pop to the upside in the market. Certainly AMD's results not hurting us here. What are your thoughts?
Yeah, well, pricing in peace again for, what is this, the 35th time? This one problem. It is. It does feel like, peace sells, and right now the marketplace is definitely buying it. Good sized volatility crush, but I have to tell you, there's still, there's some pockets of strength, some pockets of weakness, obviously inside of, the energy complex. But this marketplace does surprise me. We're not seeing, if you will, high degrees of correlation in the S&P 500 to the upside. There's still the advanced decline line still scattered and broken. There's still a lot of, if you will, cyclical rotations at this time.
All right, so let's dive into your big 3 then, because I want to just give a preview. We don't have 3 little bears today. You've got a bullish one in here. Your first pick is Netflix. Take us through this one.
Well, let's start off with a bearish trade, and that is inside of Netflix. So a few reasons why. Number one, I'm just jumping on the trend. Again, I'm a big advocate of let's jump on trend in some cases and go after some low-hanging fruit. So inside of Netflix right now, I think that there's a degree of economic headwind that hits this, higher fuel prices and so forth. Look, people are having a tough time with subscription prices, lack of maybe content, and really when it comes down to Netflix, it's seasonality. And summer months are coming. Maybe you're not exactly tuning in as much, and people may actually put this aside for a period of time. But some of this is being priced in to Netflix right now, but I think Netflix is probably going to retest the 75 level, and that's the exact setup for this trade. So I'm going to go out to the July 17th expiration, and I'm taking a little bit of time with this, especially in options. To go out to a July 17th expiration is, not necessarily the norm. I'm doing that because, again, I want the trade to kind of evolve. I'm going to be buying the 85 puts and selling the 75 puts against it. So it's a $10 wide put spread done for a $2.75 debit. Again, this is a bearish trade, looking for Netflix to retest at minimum the 75 level.
All right, Rick, so as we look at the technical setup for Netflix, are you seeing the possibility we retest that 75 level?
Well, 82 to 75 are 2 of the levels that I had highlighted on my chart here. 82 because it was low points and high points, then a breakout point here. 75 because it was those 52-week lows. So that would be kind of the relevant area for this trade would be this yellow box right here, then, just to give some visual context. As we look at our short-term trend, downward sloping channel type shape after a pretty severe decline after our earnings event. For now, we are sitting at what could be a stabilization area potentially, a supportive point near 87 marked by this gap and the subsequent highs before another gap up that's around where we find ourselves right now. So when we do look at our moving averages that we follow here, we can see that we have started to see a shift. Our 5-day EMA in dark blue, our fastest weekly EMA, has crossed below its slower counterparts here. We're also seeing our teal 21-day EMA crossing below the quarterly gold EMA, the 63-day. So now those two come together right here near about 94, giving us a potential resistance point to the upside. Notice as well that RSI is trending downward. We're below the 50 midline. We are pretty close to the oversold area, across into oversold territory, below 30 in a trending market, typically is viewed as a sign of further weakness to come. When we do look at our volume profile study, if we do start to get too far below those levels in the high 80s, that's where this node lines up with things. That could open the door to further declines then. So the bulls would want to see some kind of stabilization around 83 or so. Meanwhile, to the upside, we can see that there's the biggest volume node here on our chart that contains the point of control, which comes in near 95, the overall node 90 to 98.
All right, Netflix right now, just marginally higher on the day. We're at 87.97 right now for this name. Now, your next one, so clearly the bull among the bears right now with Lulu trading near its all-time lows right now. What do you expect to happen here with Lulu?
Yeah, I want to be very, very clear. Lululemon, I'm actually going to put on a bullish trade, but it's a trade. This is not an investment. This is not necessarily long-term, looking for upside in Lulu. This is in the here, in the now. We are way oversold. You need another term for super oversold, massively oversold. Okay, the setup in the short term is a nice bounce. Like longer term, I'm sorry, $130 yoga pants just doesn't necessarily do it for me. Nevertheless, though, the bounce in this oversold territory here is well worth taking that shot. So this trade, I'm just going to go out to the May 29th expiration. Because it's a shorter term trade, I'm going to shallow my expiration time, and I do that specifically because the options are going to move a little faster. They're going to have a little bit more delta, a little more gamma associated with them here in the here and now. I'm just going to buy the 140 calls, sell the 145 calls against it. It's done for a $1.20 debit. It's a nice, if you will, cheap shot looking for this just fast, explosive move. But again, I reiterate, this is short duration. This is trader talk. This is not a longer-term investment to the upside.
All right, short duration play on Lulu. We're going out to May 29th. That is in advance of its earnings, which are coming the next week. But as we look at the setup here for Lulu, I mean, it's not a great chart.
Yes, but as Don says, it's all the kind of where you get in and where you get out. Like there can be opportunities either way, regardless. It all depends on what you're actually doing here. So I did have a similar level highlighted on my chart. 144 stuck out to me pretty close to that 145 level. The reason it was a notable low, then that's about where we found some resistance more recently here. I also identified 152 as where we had a high point after our gap down, as well as the 162 level here, because it was a repeated low point during our range bound area, and then it was the start of where we saw our gap that we just mentioned as well. When we start to look at our moving averages next here, in this case, we're seeing the moving averages. They're all kind of in order. The fastest is at the bottom, the slowest is at the top. They're starting to come together a little bit more, though. You can see the slope of our dark blue 5-day EMA is starting to lessen, which is a potential turnaround signal. So look for price to start closing above it, and for the slope of the line to start shifting back to an upward trajectory. Notice as well that after a brief dip into oversold territory, we have once again crossed above that 30 threshold. So that is more of a mildly bullish signal as well, looking at the price activity and the momentum together right now. In this case, our volume profile shows that we have a significant node here. Our point of control comes in near about 168 at this level. So this would be the consolidated area that you might be on the lookout for, where you might see price start to slow down and run into some potential resistance here, that 168 level being the most significant, the heaviest trading area of all.
All right, and as we look at it right now for Lulu, we are at 131.50. We are up about 1% today. Now, your last pick, a very different chart here. We're up, I think, year to date more than 200% in Intel. Take us through this one.
Yeah, that's kind of ironic because that's exactly where I'm going to start. Everyone has to realize when you look at Intel, which we're going to look at with Rick in just a moment, this was a $40 stock just a few weeks ago. To give you a specific time point in there, let's just talk about, I don't know, April 1st. So what are you? 4 or 5 weeks later, you've got a $111 stock. We are in the middle of just gamma gone wild right now. And what that basically is, it's retail trade that's coming in there. It's buying calls. It's proprietary trading firms buying calls. And it's perpetuating this feedback loop. You buy calls, the market making firm sells you those calls and then turns around and buys stock, and the feedback loop just keeps on going. One, the definitive signs of this kind of gamma squeeze is you only have to look at implied volatility. You realize in the near term, implied volatility is in excess of 100%. I mean, not too often you're going to see, stocks that have 100% implied volatility that are mainstream like this. But again, the other aspect is that really plays into this. We're at the point where we have an inverted implied volatility skew, and that is the pressure to buy calls is so high that the calls, are being priced over the puts in terms of implied volatility, which is, again, not a great sign. I mean, demand is that strong for buying calls that we've actually inverted implied volatility skew. All of these things, what does it equal? A fade. And that is, I do believe we're going to see in the next few weeks, Intel fade. Nothing too crazy. But I'm going to stand in the way of an absolute freight train. And the reason I can do that, I'm going to use a spread. I'm going to define my risk, and I'm going to mitigate my volatility exposure doing so. I'm going to go out to the June 18th expiration. Again, June 18th. And I'm going to buy the 100 puts, and I'm going to sell the 90 puts against it. It's just a $10 wide put spread. Again, buying the 100s, selling the 90s. It's done for a $3.30 debit. To risk 330 to have, again, almost $7 of upside in this particular trade, I think is worthwhile when you're defying risk. You've actually clipped the volatility risk. This is just pure directional behavior in the next couple of weeks and looking for this thing to kind of fade on maybe, again, a little bit of decreasing demand, if you will, for some expensive out-of-the-money calls.
All right, Rick, so let's take a look at the technical setup of this freight train as Don just described it.
Yeah, so the 90 or 190 level, right about here, would be that relevant price range here. So, and you know, when you have a very steep, very sharp upward move like this, sometimes the best you can really do is look for notable closing highs. Like, for example, here we had the 100 level, a notable high, and then we had a small gap to the upside that was opened at that level. 95 as well, high point around where we had a notable low close, and that's around where, you know, we seem to see the lows from a different session further down the road. 86 similarly, then here 68, 70 around where we saw our big gap to the upside. Again, all about the timing. Even the strongest rallies, you know, have vicious pullbacks at times here, so it's always good to you know, be prepared and be nimble with your trading. Now we can see as well 5-day EMA in dark blue, 102.50 lining up with our trend line, so could be worth watching for a potential breakdown area, kind of lining up with the strike for that trade pretty closely as well. RSI 85.5, very high level. I am noticing though a tiny bit of bearish divergence here so far. We are making a higher close, or rather we're on pace for a higher close. RSI is not making a matching high as well. It's actually a slightly lower high, so that's not really what you'd want to see if you're bullish in a situation like this. So look to see if we start to break below our price trend line and our RSI trend line concurrently for you know, perhaps a potential clue to directional bias there. Now for our volume profile, we're zoomed into the past 3 months because we had such little time to develop any nodes relative to the full chart here. So in this case, we can take a more granular look to try to find the relevant areas. In this case, around 65. Here, around the 83 level or so stands out the most, and then here around 94, 93 roughly. So those would be the areas where we saw the most trading volume. Notice as well, tons of volume spikes here, so very heavy activity overall.
All right, right now that heavy activity because of these massive moves we're seeing in the last year alone, up more than 450% for Intel. Right now trading at about 111.11 today, up almost 3%. Rick, want to thank you for breaking down the technicals for us, and of course Don Kaufman, the co-founder of TheoTrade, for being with us today for the Big Three. Coming up next, we are going to spotlight Royal Phillips. We'll be joined by the company's CEO to break down its latest earnings. That's all after the break. Stay with us.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Get to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Royal Phillips as shares gain ground following earnings. Joining us now to take a closer look, Roy Jacobs, the CEO of Royal Phillips. Roy, great to have you with us on the show. Thank you for taking the time today. Now, I know you as the maker of My Toothbrush, but Royal Phillips is so much more than that. So before we dive into your earnings, can you just tell our viewers a little bit about Royal Phillips and what you do beyond the Sonicare toothbrush?
Sure. We're a health technology company. We have two parts of our business. One is indeed the famous Sonicare toothbrush or the Norelco shaver. The other side, actually the majority, 80% of our business is how we provide services to healthcare, to patients. We do monitoring, interventional technologies, and imaging services. And to a great extent, we do that in the North American market, but of course also globally.
Great, thank you for that. I just wanted to make sure our viewers knew that that is actually the bulk of your business, even though we're very familiar with your products. But let's dive into these earnings. You're seeing a nice pop to the upside of up about 3%. You had solid order growth, sales growth, margin expansion. What are you most proud of or most encouraged by in this quarter's report?
I think a few things to call out. First of all, we did what we said we would do within an increasingly turbulent environment. We grew orders by 6%, which clearly shows that there's very strong uptake for our innovations. We had sales growing 4% with also a very strong personal care contribution. And we had margin expansion despite that we have to absorb tariffs as well as cost inflation, which shows also that our productivity plan continues to work. We did a productivity plan of $2.5 billion over the last 3 years. We set out $1.5 billion over the coming period of 3 years, and we started at $126 million also in the quarter savings that could offset some of these cost increases that we have to deal with. So a very strong start for Philips into the year, and on the back of that, we also reiterated our full year guidance, where we aim to grow between 3 to 4.5%, step up in margins to 13.5%, and then actually also have solid cash generation. So overall, a strong start for the year.
And it is a strong start to the year, but I want to focus on something you just mentioned there too as well. You said you're focused on what you can control in your earnings report. You're stepping up productivity actions to offset the impact of tariffs, that higher cost inflation here. How much pressure are those putting on the business right now?
So we see cost inflation rising. We also see more coming, and that's actually why we are dialing up our actions. For example, we are using AI to do our software coding. 30% of all the software coding that we do now is being done by AI. We're looking also in offset in terms of strengthening our supply chain, for example, footprint in North America. We have been investing in North America, expanding our footprint. We have many locations, but actually we introduced a $150 million investment program for Reidsville, where we're actually building out our plant that we have there. So we're actually really countering and forging ahead in terms of making sure we can continue to deliver our exciting innovations that really make an impact for our customers. And we also saw some great deals that we closed in, for example, North America. We had a long-term partnership, a technology partnership to serve the WellSpan health system. We had another one with the Advent health system. So actually we're seeing also that we can provide the services to alleviate doctors and the nurses in doing their daily jobs as they're dealing with increased patient volumes in the North American market.
And Roy, going forward, do you expect to try to make more deals like that, or similar deals getting into these hospitals and alleviating some of the strain that we're seeing on the actual staff inside the hospitals themselves?
Definitely. What we see is that we have a platform play, which means that our innovations are a platform they can build on, that actually can take some of the burden away that they have to do their daily jobs on. For example, we introduced our Smart Heart AI solution of MRI imaging, where a normal clinician needs to do 14 clicks to do a heart scan. He can now do that in 1 click. So that actually saves time for the clinician, makes it easier for the patient, also less intrusive, and therefore better outcome. So we're looking at various ways, both in monitoring as well as interventional, which we are very strong in, to see how we can really improve the daily practice, also take some of the administrative burden away from a nurse. A nurse on average spends 20 minutes just on admin tasks, where actually she wants or he wants to spend time on the patient. Actually, we can use AI to take some of those tasks away. So those are the innovations that we are delivering to these health systems, and that's why we also see very strong order intake in North America and a very strong footprint that we have been building in serving the North American patients, but also the clinicians, nurses, and technicians.
And when you talk about this platform-based innovation, what differentiates Philips from other competitors in the medtech space?
Yeah, so the combination of hardware, software, and AI with very deep clinical knowledge makes us an outright leader in, for example, monitoring, where we are the number one, very strongly positioned, also in North America, but also globally. And we are an open platform, which means that we recognize that we need to deliver patient monitoring in health systems, but we also need to ensure that the data can easily be connected, for example, to their electronic medical record system that can be from other providers. So we are an open ecosystem that actually can play within the hospital setting, and that really resonates well with our customers. They want to have fewer, stronger partners that provide very reliable and cyber-secure solutions that we as Philips can uniquely provide for.
And how quickly are these relationships alongside these innovations translating into real revenue growth for Philips?
Yeah, great question. So what we see is that order conversion normally, depending on the modality, so if it's imaging, you have kind of these big systems that needs to be installed. There's a time of 9 to 12 months before orders come into revenue. Some of the fast rotating modalities, for example, an ultrasound system, can be delivered within a quarter. So you see that depending on what is the installation time, you actually can see it coming to revenue faster, but of course it's never as fast as a consumer product that actually gives you instant revenue recognition on the spot. That's also where we have seen that the consumer side has been growing stronger and faster than healthcare, but the orders in healthcare are really coming in nicely, and that already for a few quarters in a row. We have now delivered 6 quarters with our forecast, and actually that gives us a lot of confidence as well for the way ahead.
And when we talk about AI as a part of this innovation, do you view AI as a growth driver here, or is AI still a longer-term efficiency play and more of a workflow story?
So for us, actually, it's really both. We started actually to apply AI mostly first for our customers. So if you look to our differentiated platforms, every single product of Philips that serves a clinician, whether he's doing a catheterization or whether he's doing a kind of scan or whether he's doing a kind of surveillance over a patient, that actually is using AI, either to be predictive, to be faster, more accurate in the diagnosis, or to actually really help to guide, for example, the interventional cardiologist to do the best intervention. At the same time, we're also now using it more internally to ensure that we are lean, we can be faster, and actually we can also deliver better services. So that's where the productivity play is benefiting from AI, to make Philips leaner and faster, but at the same time we use it to make our customers better and also more efficient. That's where we call about, it's all about delivering better care for more people.
All right, it's getting close to lunchtime. So I'm going to go ahead and pull off a raid. Let's see what we got for a raid today.
Of course, you know that AI has a lot of benefits, also have risks that you need to be wide open on. So actually we do a lot of testing and validation to make sure that when we use it, it's used in the appropriate manner. And actually we are known for defense-grade cybersecurity.
I know he's probably at the end of his stream, but I'm going to raid Keldon again, I think. Healing, music, Move-a-thon, Pro, Morningstar, Exiles.
Supermicro as shares are rallying following the company's quarterly report. Trading 360 will be right back.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on
Windrose.
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
How's it going? First day, so
Sometimes, you know,
Let's watch Captain Jim James.
Same goes for where you invest.
This guy looks interesting.
Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends the next wave of growth. Big movers, real-time interviews, and insights from analysts, founders, and market voices you trust.
This is Sugar Skulls, y'all. We got lots of music, technology, and more. Come on! Come on! Sugar Skulls Show, here we go. Music, tech, and much to flow. Come on, dance, let it show. Energy high, feel the glow. Lights flash, we gotta catch. Groove to the sound, make it last. Tech magic all around. Feel the vibe, feel the sound. Join the ride, music loud. Tech and tunes, we so proud. Sugar Skulls in the crowd. Come on, shout it out now. Gadgets, lights so bright. Rhythm takes us through the night. Feel the pulse of the scene. Sugar Skulls, living a dream. Come on! Step by step, we won't stop. Feel the beat, make it pop. Take it to so alive. Sugar Skulls, keep the drive. Join the ride, music loud. Tech and tunes, we so proud. Sugar Skulls in the crowd. Come on, shout it out now. Join the ride, music loud. Tech and tunes, we so proud. Sugar Skulls in the crowd. Come on, shout it out now. Step by step, we won't stop. Feel the beat, make it pop. Taking tunes so alive. Sugar Skulls, keep the drive. Join the